皆さん、こんにちは。Today, under the title Digital Blueprint for Tax Audits, I will explain strategies for safeguarding data continuity to survive in the AI era. This is a practical guide for corporations and sole proprietors to ensure full compliance with the KSK2 system, AI, and the Electronic Bookkeeping Act. AI-driven tax audits are by no means a thing of the future, they are already a reality in current practice. In the fiscal year 2024 corporate tax audit results, the amount of additional tax collected reached 340.7 billion yen. Instead of random selection, the current approach uses risk-based selection, where AI predictive models analyze tax returns and existing data to identify fraud patterns and select corporations and individuals with a high need for audit. The era of being audited simply for standing out is over. We have entered an era where audits are triggered by anomalies in the correlation between figures and trademarks. Tax audit methods are undergoing a paradigm shift from reactive administration to verification-based administration. In the analog era of the past, tax inspectors would sift through cardboard boxes of paper documents, and sometimes you could get by with an intuitive explanation on the spot. However, today, algorithmic predictive models are used, and electronic data is collected in advance through e-tax and other online channels. Taxpayers are now required to provide consistent, system-linked documentation, meaning that every piece of data must align, not just the tax return itself. The National Tax Agency has now completed a three-pronged digital dragnet. The first is the ability to see, which involves grasping the full picture of economic activity using tools like KSK2. The second is the ability to discern, which involves instantly detecting suspicious fund movements through AI data analysis. And the third is the ability to gather, which involves pre-collecting PDF and CSV data by leveraging the cloud. This has led to a dramatic improvement in the accuracy of investigations, rather than just the volume, and escape routes are rapidly disappearing. The cornerstone of our defense is data continuity, the chain of evidence. Our greatest line of defense is the ability to track a single transaction from start to finish, from commercial flow to settlement, fund transfers, accounting records, and tax filings. You need to be especially careful about advancing or deferring revenue recognition, discrepancies in gross sales caused by deposits made after fee deductions, and the unnatural commingling of personal and business funds. The Electronic Book Preservation Act should be viewed not just as a filing requirement, but as a safeguard for tax audits. The standard for our defense is whether you can successfully extract the requested data within a span of 3 minutes. Excuses about delays or not knowing how to submit won't fly. To ensure immediate submission via e-tax, organize your folders by client or month and strictly follow a naming convention that allows for instant searches by transaction date or amount. AI and data analytics will pinpoint any unnatural patterns with precision. Areas of extremely high risk include the validity and pricing of outsourcing costs, as well as fund transfers to executives or their relatives. Since intangible services often lack sufficient documentation, a complete set of contracts and deliverables is essential. Additionally, discrepancies in the timing between revenue recognition and payment, as well as inconsistencies in consumption tax invoices, are also high-risk areas. AI instantly flags even the most subtle discrepancies in ratios that human investigators might overlook. Critical vulnerabilities prone to exploitation vary depending on the business model. For small businesses and sole proprietors, the line between business and personal funds tends to become blurred. So, resolving the commingling of personal and business finances is the top priority. For IT consulting firms, as evidence of intangible services is often thin, proving the legitimacy of outsourcing costs is a critical point, while for import, export, and cross-border e-commerce businesses, the management of payment channels, such as overseas remittances, is a point easily flagged by AI. There are 5 critical gaps that businesses must prioritize closing as part of their defensive strategy: monthly reconciliation of sales ledgers against payment records, verifying the legitimacy of outsourcing expenses, digital archiving of electronic transaction data, maintaining accurate invoice records, and ensuring immediate searchability. If even one of these is not addressed, you are extremely vulnerable to investigations in the KSK2 era. The biggest weaknesses for sole proprietors are a lack of supporting documentation and the commingling of personal and business expenses. AI instantly detects any suspicious activity in personal accounts. To prevent this, you must completely separate your business and personal bank accounts and credit cards. Furthermore, for platform sales, you must clearly distinguish the commission difference. For cash sales, recording them daily rather than as a lump sum serves as proof of actual business activity. In an era where immediate submission via e-tax is required, having the documents and being able to produce them on the spot are two completely different things. A weak submission system is seen as a direct reflection of a weak audit system. If a third party can retrieve it within 5 minutes, you're in the clear. Any system that takes too long to search is a red flag. Relying on memory due to a lack of evidence puts you in the danger zone, where you are most likely to be questioned over unexplainable discrepancies. Future tax strategy is no longer just about finding simple tax-saving techniques. It is the very design of business processes where transactions, accounting, and the preservation of supporting documents are integrated. A company that thrives in the KSK2 era is not one that comes up with excuses after the fact, but one that has a well-designed system in place to automatically provide proof within its monthly workflow. Finally, I would like to propose a 30-day action plan to help you navigate AI audits. Step 1 is an emergency review of electronic transaction rules. Step 2 is a monthly reconciliation of high-risk areas, such as discrepancies between sales and deposits. Step 3 is a data extraction test simulating an e-tax filing. And Step 4 is conducting a mock tax audit. Let's implement these to dramatically reduce unexplained discrepancies. Thank you for watching today.